This is a follow-up talk on Chapter 2, Debits and Credits. In a previous talk, I tried to show the contrasting nature of debits and credits by use of color code. That debits I indicated as a red color indicating economic resources of the firm, assets, and credit as a black color representing the beneficiaries on the right-hand side of the equation who have a claim against assets on the left-hand side. Beneficiaries are either legal liability beneficiaries or the owner claims. Again, left-hand side debits dominate, right-hand side of the equation credits dominate as a pull or an economic tension against the assets in a corporation. There's a tension there. And it was a debit and credit terminology that was used by the original documentation 500 years ago and still stands today in modern accounting. I also want to emphasize the risk of the Chapter 1 math, that as both sides of the equation were increased, Chapter 1 said plus here, plus there, indicating an increase to both sides, either assets or the liabilities and owner equity. Chapter 2, in effect with debits and credits, is representing that increase as follows. Contrasting terms, debits, credits. As assets are increased in Chapter 2, it's indicated with a debit. As liabilities or owner equity categories are increased in Chapter 2, it's a credit transaction. Now, accounting does not use positive and negative signs, although we can assign these to debits and credits respectively. So as the resources of a firm increase, there is a corresponding claim on the other right-hand side which has a pull against them, an economic tension pull, a negative credit. Again, the positive minus signs are not used in going forward in using the contrasting terms, debit and credit. Likewise, in Chapter 1, as there were decreases to both sides, negative and a negative, by the way, it's this right-hand side that's giving us the issues in the transition. As assets are decreased in Chapter 2, we say they are credited. The right-hand side accountability, as it's decreased in Chapter 2, we say it is debited, because that is an exact contrast to the increasing. Increase with debits, increase with credits. Decreasing it, decrease with credits, decrease with debits. Now it's logical on the left-hand side, as assets are decreasing, it'd be a negative. That's logical, but what's not intuitive is that when the right-hand side, which is a negative, if you will, has to be reduced with a positive debit. And again, Chapter 2 will not show signs. You'll simply say we're decreasing assets and decreasing the accountability for assets. That is, when assets decrease in total. I want to illustrate 7 transactions in terms of debits and credits on each respective side of the equation. First one, owner invests assets in the business entity. As the owner invests assets, we debit assets by increasing them, and we increase an account under the right-hand side, the owner capital account, with a credit. Debit assets, credit owner capital under the equity category. Business borrows cash from the bank. More assets come in, debited. Notes payable, legal liability, is increased by a credit. Number 3, business exchanges its cash for a different asset. This is a mixed change only. So, cash goes down, and let's say the firm is buying equipment. Equipment goes up. Equipment goes up with a debit. Cash goes down with a credit. Equipment going up with a debit. Cash going down with a credit. Number 4, business pays an expense. Transaction 4, business pays an expense using cash. We're going to reduce cash on the left-hand side with a credit, and we're going to charge an expense account with a debit on the right-hand side under owner's equity. The cash being reduced with a credit reduces it, and a counter to the normal credit balance and equity, negative, is reduced with a positive debit. Transaction 5, the business repays the bank loan it took earlier. So again, cash is going to go down with a credit on the left-hand side, and the notes payable account is going to be reduced with a debit on the right-hand side. Reducing cash and reducing that previous credit with a positive debit on the right-hand side. There'll also be interest expense involved in this, by the way, which we recognized under equity interest expense. Total payment is for the principal amount plus interest expense. Principal amount is reduced under liabilities, and owner's equity is reduced using the interest expense account. Transaction number 6, the business records an expense before it needs payment. This is an accrual and expense. The expense belongs to 1 month, February. We don't have to pay it until March 20th, let's say. So we're going to debit or charge an expense account, and we're going to increase a liability with a credit. These are transactions on the same side of the equation, one under equity, one under liability. The expense account charge reduces equity with a debit, and the liability is established with a credit. In transaction 7, business pays off the expense previously recorded or previously accrued. So cash is going to go down on the left-hand side with a credit, and the liability account previously established is going to be reduced with a debit. Cash going down, liability being reduced with a debit. Recall in the previous transaction, when the business recorded the expense, it didn't need to pay it right away. We debited expense and we credited the liability. Now we're paying it off. So we're paying off the liability. The end result of these two separate but related transactions, the liability is extinguished. In the end, cash is paid and the expense was previously recorded. Cash paid with a credit, expense recorded with a debit. The previous accrual was reduced in the second transaction. taking it out of the stream. Two separate but related transactions. To emphasize the interaction of debits and credits in Chapter 2, assets are increased with debits on the left-hand side of accounts. Liabilities and owner equity are increased with credits on the right-hand side of the account. Debits mean left, credits mean right. These are the native or territories of debits on the left, debits dominate, credits on the right claim, offsetting each other. These accounts are increased in that manner, and they are decreased in reverse manner. Assets are credited, reduced, and any liability or equity account previously credited with an increase is debited, positive debit, to decrease the previous credit transactions. Debits and credits don't change their spots, but they change their meanings. They don't change their spots, but they change their meanings. Increases here, decreases on the right-hand side. Likewise, credits increases on the right-hand side and decreases assets on the left-hand side. So their meanings change, but their spots do not change. Otherwise summarized, assets on the left-hand side are increased with debits. Liabilities and owner equities, the categories, are increased with credits. Opposing or contrasting signs or forces. Any increase in asset, in total, there's got to be some increase on the right-hand side by a credit which pulls to economic tension against the asset on the left-hand side. Again, the reverse number line, positives on the left, negatives on the right, represent the tension between debits and credits as assets are populated with positive debits on the left-hand side and some claim is established with a negative credit on the right-hand side. Again, Chapter 2 does not use the signs, only the terms debit and credit. There is another professor that uses a similar concept of zero in illustrating debits and credits. This particular illustration, as assets are increased, moving away from zero, increased with a debit. As liabilities and owner equities are increased, they move away from zero in a negative fashion with a negative credit. And as assets are decreased, moving towards zero with negative credits. And as liabilities and owner's equities are decreased, moving towards zero with a positive debit. Again, the right-hand side is negative when it increases, so therefore it must be decreased with a debit. The left-hand side is increased with positive debits, and as assets are decreased, they're decreased with negative credits, getting back to zero as a locus or center between the two forces, positive on the left, negative on the right, in an increase mode, moving towards zero, opposite in a decreasing mode. Debits left in any account, credits right in any account, no matter where the account is in the equation.